Hi folks, it's just a very quick and rough update on natural gas. The weekend saw this gap down as I thought might happen, and actually we just gapped down to the top side of that trend line and below this support at around 2.07. Just touching, not quite, but just about $2, this low from a few days ago, and slightly above this low below $2 in February. So nothing convincing on the long side. I have, however, closed my hedge, so I'm now square in the market as far as futures go, but I'm going to show you that I've put a little trade in on Oranda, so we'll have a look at that very quickly. But as far as this goes, I'm not convinced either way. I think overall, though, as long as we're holding above 1.5, roughly, we've still got a target of $3.50, 60 or 75, as I keep on saying. How long that's going to take to get there or not, I don't know. I'm not prepared to enter a trade on this, my main broker, with a futures position because these are quite large positions. But what I have done is I've entered a trade on Oranda, and I'll show you that position right now. So this is my Oranda demo account. I've also got a live account with a similar trade set up, which I could switch to, but I'm not going to display my live account here in public. And whilst I'm talking about it, the other thing I think I should probably not do is tell you exactly what positions I'm in. I'm going to do it for now on this small account, but I'm not going to do it for my main account with the futures contracts because I'm getting a lot of feedback from Twitter and from YouTube about my trades and my positions, a lot of flaming, a lot of trolling from all sorts of people, and I really don't need that in my life. So I don't think I'm going to be explaining my actual positions when it comes to my funds and my managed account because it's really just not worth the abuse that I get over the internet. But I'm willing to show you this on the Oranda demo account, and remember I've got a live account running as well on the same platform with a similar trade, and I'm not even going to tell you what size these positions are, but you can get a guide off this one. And this one here is a long position which I've just entered at around about $2. I'll show you the specifics on the trade, and you can see if I kind of zoom in on here where the stop loss and take profit is on this Oranda demo account. And this is very similar to my live account. So my entry price is around about $3. The stop loss I put in is at around about $1.40. And my target, you can see just at the top there, is at $3.50. So here I was able to get into a long trade. Remember, these prices on Oranda are not the same as the futures prices, not the same as Boyle and all the other ones. I managed to get an entry price of $1.98. I've got a 4,000 unit trade size. My take profit's at $3.50, and my stop loss is at $1 something, thereabouts, I think 37. So this is the overall trade idea for natural gas. Remember, this is a demo account, this is a trade idea. I've actually got a similar trade on Oranda on a live account, which is running here in the background on the other screen, so to speak. So that's my trade idea. You can do this with Oranda because of the way it's structured. There are overnight carry fees, which I'll show you in one of the next videos what those fees are. But you can just do it like any other trade, and you can position it the way you want it. Right now I've got a couple of $1,000 downside risk. I think it's $2,400. And the take profit at $3.50 is around $6,500. So it's not quite 3-to-1 reward to risk ratio, but it's something similar to that. But this is a completely different sort of trade that you can do with a broker like Oranda, remembering that these prices are not actually the futures prices or what you'd get elsewhere. These are just sort of almost made up prices by Oranda. But I think they're pretty sort of honest about the way they set these prices, and they use futures and spot prices and make their own sort of price up. But it's tradable, and it's quite fun to trade, and it's easy to trade, and you can trade it with very low risk. We'll have a look at the rollover or the overnight carry costs later on. But going back to the futures chart, which is the basis upon which I trade my main futures contracts for my large accounts and for my clients, there's no evidence of any direction right now. We gapped down after the weekend. We've moved up and down. We formed this doji hesitation candle towards the lower side of the range. So if anything, that's slightly bearish. It's definitely not bullish. So I'm going to be watching this very closely. There are some good things about this. We've got a little wick low, but we do have a wick high. So it's a doji rather than a spike low. But we've also held above this range low. And we've also just sort of moved down to the top side of this downward trend line and bounced back off it. And the reason I closed my hedges, which was a question I got a lot in the last video I put out, is because I want to start with a clean slate really, and I'm now looking to the long side on natural gas. I don't know quite when or how I'm going to structure the trade, but it's not yet. I haven't seen anything convincing. I'd like to see a move at least above $2.20 and then a break up and a hold above and a bounce off there for me to get some conviction of a move up to $2.30 and then progressively breaking up through these resistance levels above us. The other thing I'd also like to see is a move down to $1.80 or $1.50, down to these levels below us where I think at some stage we're going to see a bottom on natural gas. So I may be tempted to start buying at $1.80 or $1.50 with hedge stop losses beneath. So in other words, if we break beneath those levels, I'll add short positions and start to hedge to the downside. But with a bit of luck, we'll hold above those levels and begin to move higher back up to the $2 level and then higher. If we don't get down to the $1.80 or $50 level and start to see some evidence of reversal, that's the stage at which I'm going to switch long. So the reason I've closed my hedges is because I'm now starting to bias myself more towards the long side. It doesn't mean that I'm going to take a long position just yet, but I'm certainly angling in that direction. And the fact that I've taken this sort of pseudo type trade on Oanda, it's not really a pseudo trade, it's a proper trade. It's not really based on real world spot prices or futures contracts, of course. It's a kind of a made-up price CFD type instrument, but it's tradable. If this trade works out on the live account, which is similar to this demo, I'll make $6,000 odd, and if it fails, I'll lose a couple of thousand, $2,500 if it hits my stop loss. This is not an account where I have a hedging facility in any case, so I work with a hard stop loss and a hard take profit and keep trading very, very simple. So I hope you found that useful. I'll try and update you in the next day or two again, but right now, we're just sort of forming this hesitation. Remember, a doji candle is a hesitation candle. It's not a reversal candle, as many traders think. And it simply means that the market's pausing at this support level, not sure whether to go up or down. The momentum, though, is to the downside after the weekend gap down. But we're holding above the trend line and above support. So let's see what this day holds. And it also depends how this day closes out. There's still a few hours left, and we may get a bit of a rally. And who knows, we may end up closing at the top, or we may end up closing at the bottom, or we might just remain as a doji-fied chart pattern until tomorrow. I hope you found that useful, and if you did, as always, please like the video and subscribe to the channel. Take care.